Hi, Tom Lydon here in San Diego at the Charles Schwab Impact Conference, here with Jim McDonald, Chief Investment Strategist at Northern Trust. Great seeing you, Jim.
Thanks, Tom. Good morning.
Good morning, good morning. So listen, as we're closing out 2019, how do you feel about the markets today, and what are some of the main things advisors need to be thinking about?
So we're constructive on risk-taking. There's been some concern that the economy globally is softening and that we're at risk of recession. We don't think that's the case. We're starting to see some improvement in some of the leading indicators. So we are constructive on risk-taking into 2020. We want some protection, though, against some of the areas that do present some bigger risk, primarily trade. So we do like U.S. stocks at the expense of emerging market.
Okay, so as we go into 2020, are you concerned about any headwinds at all? What are some things that we need to kind of get our radar up about?
Sure. In addition to paying attention to the pace of growth, we'll be looking at our two primary risk cases. Inflation resurging, which would be a big upset to interest rates and devaluations. And the second is what we're calling election clairvoyance. So as investors start to try and discount the 2020 U.S. presidential election, that could lead to some volatility, selling of certain sectors, buying of others, depending on who looks like they're leading in the polls. We are cautioning, however, though, that it's really hard to have confidence this early in knowing who is going to be the eventual nominees, because at a similar time in prior years, we've had people like General Wesley Clark, Rudy Giuliani, and Rick Perry in the lead. So don't get too carried away making predictions right yet.
Good point. And you talk about inflation, no signs yet of anything to be concerned about, right?
Correct. We have a long-term theme called stuckflation, which is the impact of technology bringing lots of supply into many industries. That's keeping pricing power down. 10 years into an expansion, we don't have inflation yet. We think the odds of it really resurging are relatively low.
And you mentioned a little something about politics. We talked to political strategists at all. You've got to be doing some internal modeling. Obviously, Trump's going to be the front runner on the Republican side. On the Democratic side, that field is narrowing. Any concerns if there were one winner versus another?
Well, sure, but let's talk about practicality. What is an advisor going to actually do? And what we did in 2016, I think, is demonstrative, which is you run through scenario analyses, and then once you know what the outcome is, you have plenty of time to adjust portfolios. The Republican sweep trade, or the Trump trade, if you will, ran for a long time after the election. So you could actually make a mistake by trying to discount it too much ahead of the election. Likely we'll approach the election with scenario analyses and make the shifts once we know what the outcome is likely to be.
Excellent. Well, Jim, thanks for coming by. Really enjoyed your insight. Look forward to catching up soon.
Thanks a lot, Tom.